children of planet Earth. Hello from the children of planet Hello from the children of
What's up, everybody? Good morning. All right.
Hello from the children of planet
What up, everybody? All right. Market opening nice and clean and easy. In between needy bands, no irrational signals, looking pretty solid. All right, time to get started. Hey, smash that like button, friends. Let's go. I wait to get this challenge on the way. What is going on with my music? Oh, volume. Let's turn it up. All right, everybody, getting ready to get going here. Is the stream loading minus spinning wheel? Oh. Does it sound good? Seems good on my end. All right, let's get ready to get rolling here. Friends, smash that like button real quick. Give it a hit. I'm gonna start in about 3 minutes. Just take a quick look at the news this morning. Nothing is, apart from, you know, what's going on around the globe, there seems to be nothing directly affecting the market. You had our PPI today. Core PPI came in 2.7 on 2.3 estimate. That's pretty good. And then PPI month over month, September is a half, 0.5 on a 0.3 estimate. It's a slight beats, and the market moved up, came right back down to where we started, and effectively priced it in. So it's no longer an event. The event is over.
Today's high school students have the same anxiety.
But this was all right, we back. Let's see how things go. It was the size of the small account. It was a 5,000 start. So goal is 10,000 month 1, 25,000 month 2, yada yada yada. See if we can't get that. Yeah, we're trying to get a patch in to save your settings for trading. So coming in here, settings trading. Let me make sure it remembers that. All right, market's open. All right, let's go. So get it run out the door, 77.2. Resilience looking solid here. Ooh, it's a one whole point here. Let's get it. Let's go. We're gonna buy here, and then see what we get on liquidity map. Oh, solid. Same trade as yesterday. Let's go. Okay, I'm gonna buy again right when we hit on this dip here. Boom and boom. Res is clean. I don't know if we're gonna get a dip. There it is. That's it. Fix it, nothing in the way. It's clean day. All right, that's it. Let's see if I get it. No issues here. Did I do a funded account for this or all my capital? Oh, no, just my capital. This is just trading to show off the platform trading here. Rock's here. That's my setup here. Long there as well. Long. Stop. Might take another stab here. Trade 2. X to X. If res is greater than 0. Same thing. There we go. Let's see how QQQ is doing. So nothing cool, nothing bad on VIX. All green lights. This is good. Let's go long out the door. TD ratio 99%. Let's go. Oh, you can't beat that. QQQ belong up, looking great. QQQ, same thing. Bounce 370 support, rally from that. Awesome. Okay. IWM. Let's look. How's my trade doing? 200 bucks. Not bad. 10 more points on that. IWM still support BLU. Good deal. And all these liquidity maps are great. 99% resilience. Oh, I mean DD. Yeah, dude. Like the market is just so strong. Nvidia, good. Gap and go. Like monthly stocks look exactly the same. AMD today as well. Okay, cool. Let's check the sectors this morning, everybody. Y'all want to learn how I do the mornings here? Let's take a look. And good materials, everything great. Utilities looking great. Consumer discretion, everything's looking great. Bull market's back, and we tweeted that the other day. Res is looking super solid here. Just for some fun, let's go ahead and pop up a SPY monthly map here and see what the month looks like. Let's go. TD killing it. Oh yeah, 100%. Okay, SPY monthly map. You guys, y'all want to see what the future looks like? The future is now. Let's check out monthly map on SPY. Alright, monthly map on SPY, still the same thing. You want to see how the monthly map looks? We're going to go to the Rocket Scooter cheat sheets inside of the Discord. I love these cheat sheets, they're so good. Alright, here we go. Take a look right here. Going to analyze this, and we're going to make it pretty simple. You see the bulls, everybody see bull market is back, right? I'm going to draw with the green and red. So in the green side, the S&P bull side sloping down, at least for the next week. So for 1 week out, you have this. Right? Bulls longing more. Right here. Right? I may draw a line all the way there, but you get it. The second one, top of the bear zone. Bears exiting positions. Bullish. Bullish. You see how this works? Bull market's back. Can't not beat that. All right, everybody. Love it, love it, love it. I get so happy seeing the bears be wrong. Resilience, DD, resilience liquidity map. They don't lie. They tell you the truth. They show you what is in the market. Sometimes when I try to tweet at Rocket Scooter, I tweet the Houston Rockets. How are we doing? Oh, 230, not bad. Not bad for the small account. For the, we're in the $6,000 range right now. So we're just inching along. Can't argue with that. Let's hope we keep going. As I say that, a red candle comes out and boo. Let's see, watch, resilience is still looking strong. So I'm still okay there for top of the box support. So we'll see. No! I spoke too soon. Wah. Why you hate me so much, universe? That's okay. We'll see. So here, and I also have a long position from here. DD. I'm gonna hang in there and just hold it. It's about a 44.22. It's about right here. It's about at a 1.5 to 1 ish trade. I'm very confident in it. Resilience, bullish. There's your resilience roll. Outside of the box, I'm hoping to support on the box, which is good. Hopefully. Over target DD, no irrational rules. Golden setup, everybody. Does Pro Plus have a channel that calculates the daily? Yes. If you have Pro Plus, you get the daily DD band. That is for you. That is a Pro Plus feature. You have a couple places you get it. Number one, it's listed here in risk interval. Actually, which I'm going to say, let's call it. So down here, it'll print them for you. How do you get the DD band? It's right here. If you go to risk interval, click on it, and the DD, all the DD bands for all the futures will be listed in the tabs. If you click it. Right here. Yeah. Why does the market hate us today? Why are you not moving? It's been a little bit jolty today. Okay, there's that second spot right here. Question is, what do I want to do down here? That's just a 5-point move. I'm going to stop right there if we lose it. I'm just going to hold. Yeah, no problem, dude. Glad you guys like it. Expecting pullback? Nope. Not at all. Not expecting any pullback. All signs are pointing up. So let me show you guys. Let me show you how this works. I'll give you a quickie little tour real quick. Okay, so first thing you do every morning, right? So you got your cheat sheets. So we have a bunch of cheat sheets that you can use from the platform. This gives you all kind of information on how all of our major tools and indicators work. So there's three major, we call them the big three. The big three are as follows. I'm going to write them at the top. DD, resilience, and then liquidity map. So what they do, and they actually are the priority in that order, what's most important to the day. So let's do a quick, oops, let's go back. Let's do a quick trade plan sub. Let's go ahead and mark it really big. Okay. So let me try to make this like a little bigger so you can see all of it. Again, I got my future screen on the right that's really big. Okay, we'll make this guy really big here. Okay. We cool? All right. So DD ratio is the percent of market cap in the SPY that's in a bull zone. What is a bull zone? We'll visit that in a little bit. Bull zone is this dark gray thing. Currently SPY is in a bull zone, hence the letter B. 98% of the market cap of stocks are in bull zones. Bull zones is where the net risk distribution of market maker options sold to other dealers of the underlying stock, so that's a mouthful there, is gamma positive. The net sum of all things balanced for today. All options that exist for this thing, for SPY. If you were to weigh out the entire landscape of the options world, SPY is gamma positive on all weekly options that are sold to market makers. Market makers are buying and selling the underlying shares and buying options to hedge it. They're sitting on a seesaw, and the balance point is called a liquidity pocket. If they're just slightly bullish or slightly bearish, the seesaw starts to tilt one way or the other. The seesaw is balanced right here in the liquidity pocket in the middle. There's your bull tilt, there's your bear tilt. It's a pure distribution of the risk in the market. So 98% of the market cap is in a bull territory, which means people have longed to push calls into the money, which means there's just native longing. You consider that's your sentiment of the market. So check right at the top of the day, DD is bullish, big B, bullish, okay? There's also some trading rules on that. So DD ratio is bullish. It's bull market, baby. We did a monthly map analysis a little bit ago, as you guys remember. The monthly map is something we talk about as well. This is just show you the sentiment. I'll get to it in a little bit, but the gray box is sloping down from the bottom. I think those top of the gray, light gray is down, and bottom of the dark gray is down. So this is double bull market on the sentiment side. So the longer term sentiment over the month is bullish for like the next week. Strong bull for an entire week. And overall landscape is bullish. Okay, check. Doesn't mean it's going to skyrocket today and go straight up because of that, but at least I know I have some sentiment to look at. So we have some rules. You go to your cheat sheets, and these are all available to you if you're trading. One second. So the DD rule, your cheat sheets, you can get these all from the Discord right now. We're going to get them posted on the website as well. Now that they're done. DD ratio has a couple of rules. Number one, if the ratio is bullish, let's check. 98% is bullish. Bullish is 50. So there's three rules. If you open in a bull zone, or you open in the middle, or you open in a bear zone. So look at SPY today, right? SPY opened in a bull zone, right? So bull zone has bull zone support. So already out the door, I have support right here. So I'm just draw a nice little up arrow until it bumps into something and just write the word DD. Does everybody here type a yes in chat? There's some rockets in chat if you understand. I'm gonna go through the rules one at a time. How I'm making a trade plan in 10 seconds or less. All right. What the name of the DD indicator, the white lines? Oh, I'll go through a couple of different ones. All right, so cool. So DD is already support. So already today, my brain is thinking a dip just goes to there and I'm ready to buy with a stop there. That's easy, easy as pie. So far, so good. Okay, good, right? So strong overall sentiment in general, and it's also actionable off the bull zone. Okay, good. And now the second indicator that really matters is resilience, right? So resilience is the gap fill predictor for SPY itself. We're using anything you trade, stocks, index, futures, options, whatever. You're going to do this same analysis on SPY every day because it's the most important thing you do in the US stock market. Again, consult your cartoon. You ever thought you'd learn how the stock market works with cartoons? Because it's the easiest, quickest way to show you guys something. Here we go. Resilience, is it bullish or bearish? Well, greater than 0 in a rational market is bullish. Here's your resilience, way greater than 0. 43, here's also the chart. It's been above 0 all morning. You have three modes of that. Either you're inside the box. So the box is the redistribution zone. This is the open of today and the close of yesterday. We gapped up, and the question is, are we going to be a gap and go? Resilience is a predictor. Are we a gap and go or not? A gap and go or gap and fade, right? And as you see, I'm betting on the gap and go. Everybody tell me you understand this rule. So which mode are we? Are we above the box, in the box, or below the box? Well, we're above the box. So outside of the redistribution zone, which is this box right here, the box itself is support. And the fucking box itself is support. Let's go. God damn, I love our stuff. Right? It doesn't mean I'm right. Doesn't mean the trade has to go up, but it means I plan for these things. So not only we have DD being a bounce point from the bottom, we also have support right here. Now, if we break support, then I know I'm wrong, right? It's bouncing around right now. It's having a hard time doing that support. As long as res is above 0, then I hope to support there. So I long right here to build a position. Another rule is in the middle of the box, it fluxes up, and the bottom of the box will flux up as long as resilience is greater than 0. And as you see, it's fighting its way down to lose. So anytime resilience is less than 0, we're going to lose the halfway point right there. So keep in mind that I've kind of like a break point here, and I'm going to put a little red line, is that right about here, we need to make sure that res greater than 0, res less than 0, I'm going to trigger my stop. Remember, DD has a stop right there. Res greater than 0, we're going to push up. Res less than 0, we're going to push down. Okay? Res right now, bullish. So far. Bullish and fighting. It's fighting to stay alive, but it's still alive. Greater than 0 is all that matters. Right? Okay. Now again, it is just chopping around and I can lose. So we gotta be very careful. Keep an eyeball on this. The next stop is liquidity map, the last thing. And the liquidity map is my actionable pivots for the day. Liquidity map, right? Oops. Let's do a thing here. And this is my decision making, right? Liquidity map, we're going to talk about here. I'm just some green arrows. Liquidity map here has the following setups, right? We have, and looks like we're still okay. Now the question I think is, do I want to hold through that? I probably will. I'm going to stop right here where this X is if I'm wrong. Okay, so open, blue, open is a trade setup. Open, blue, open. So right here, we have basically two different options. There's a V that looks like that. There's also a, if we support it open, we're still hanging in there. If we support it open, we trade up to next resistance, which is DD band. So we're gonna draw that right there, right?
So piecing it all together, it's a bull long up setup. Now again, the market can go against that or whatever, but at least I have a trade plan set up here. I know as my point of no return, anything down here is bad, very bad, right? This is where the least of the three is where my stop, like the market is completely turned around. So if you look at it, resilience is going to flux us through the box. DD is going to support right there. And then hedge pressure is going to support as well. We got three different rules to look at different things. This is the balance of hedging versus positions. So while all of you piece it all together, we can really see that there's just kind of one trade plan. And let me put it like on like a, you get to see the pieces. Now let's put it on like one chart. Let me just make it kind of big here. Oh, the market's going against me. Am I scared? Am I worried? Not yet. I'm hanging in there. I'm not seeing the red candle go, time to short this. Let's go, you know. Okay. So when you put the three pieces together, again, and the thing is that we're not doing time frames. What candle? Nope, doesn't matter. No candle duration. You're not using time frames anymore. We've reinvented charting. You're not even like putting indicators on your chart. This is universal for whatever time frame. This is today's risk, no matter what. So you can see that we have pivoting through this middle of the box, right? Just about right here. There's like a pivot push here with a possible move and support there to go to DD band. That's one trade setup. We're going to call that one. Number two, and because that's going to require res greater than 0 in both setups. DD greater than half, okay? And so res is good, DD is good, check. So that's really my trade. The reward is there. The risk is there. This is going to that band, right? Yeah. Okay. The second trade is a contingency. If we fall to here, I can have, and we're calling this one, trade number 2 goes from here to open. That's that leg. So a scalp through there, and again, I'd be very confident to long right there with the stop, exit right there, and I want resilience to be at least greater than 0 inside the box as well. So that's trade number 2. Does everybody see how this works? And that's basically it. I'm just kind of piecing it together. So whether right or wrong, we're gonna see, right? So here to DD, band, and here to there. As long as these numbers stay good. Now res, we're losing res, and now I don't like it, right? So this is kind of like, do I like what I see? Do I not like what I see? And so as we're getting through here, do I have any bad signs? This is slightly below 0 and it's fighting, so is NASDAQ, right? The market's trying to sell. And the question is, what happens here? Dun, dun, dun. I was pretty confident, so I got in slightly big. Not big, but like slightly big-ish. But I don't think I fear what I see just yet. But we're going to keep an eye on this, right? So again, this is kind of like yesterday. I don't like that it's fighting, and the question is, should I just hang on to it or not? The market's going to try to sell it. The market's looking for any reason to pick up some momentum as of lately, so we'll see. And of course, we had an event today, PPI. A lot of people can sell off on these events too, so you be very careful. Just kind of watching it, so we're on the edge here. Day 4, and he keeps saying bullish, and the market keeps dropping. Mike Jones, you honestly, I don't know. market's been rallying for 3 different days. Are you that guy with the mullet that stalks me and my family? Here's what I'm gonna do. I'm gonna do you a really good favor. Watch this. I'm gonna put you in timeout. And I want you to sit there and think about what you did. Put your nose in the corner of the room. And I want you're in timeout, child. Your mommy and daddy are very disappointed in you. They want to teach you the difference between these two things. I know you didn't learn much when you were younger, but here's what you need to learn. This is something that means this is called up, and this is called down. And the market is not been going down for 4 days, it's been going up. Think about what you did. Your time out, young man. Day four and you keep saying bullish, and the market has just been going down. And I'm not even like awake enough to have I wish I was more clever with my anti-trolling, but anyways. What has been... Day 4, if you had puts in your account, would be flushed. Yeah. Yeah. There's this weird deranged fan who kind of been stalking me for years. I say fan, I'd say more like obsessed. Probably obsessed with how we're getting like really big and whatever. They've been like sending private eyes to me and stuff, and like weird stuff. They blew up my phone, and I was like, I had to change my number. I mean, there's a lot of... And I was like, oh yeah, there's some crazy people in this world. All right, it feels the regime of importance have changed last year. And I'm like, I'm not even like that famous. I'm like 0% famous. Why should I have a stalk? Me on YouTube, I shouldn't have stalkers. Like, I know I'm cute. I mean, I've seen myself in the mirror. I'd do me. Oh yeah. No, seriously though. It feels like the regime of importance have changed last year and into this year was inflation data trumped everything. Now it seems Fed policy is the highest valued overall. Hot PPI is such a muted. It's all it is. Actually, right now, the realness of the market of what we're dealing with is, you nailed it. Like, just a little bit of analysis real quick, right? Right now, the question is, let's go over what really happened. Okay, let me just make this big. And y'all scream at me if my position starts fucking up. All right. Actually, let me keep res in the top of my... Okay, so let's talk about what we've had, right? I guess we're only showing this much data. Okay, let me draw the rest of it from memory. Market. Okay. That's close enough. Actually, I missed the July wave. Whatever. No, I didn't. There it is. Okay. So we had a sell-off market because of two things. Two things the market sold off on. You want to know what it was? We had or two triggers. You had QT and rate hikes, right? Those are the two big things. QT is really the biggest reason the market's doing this. We all understand that. Let's just talk about the elephant in the room that a lot of people are forgetting about. I know, like right now, yes, right now the narrative is what is the Fed going to do in the rate hikes? But in reality, the big post-COVID rally is now trying to like figure itself out. Like, we dipped and now we're kind of coming back and like that. The reason this is doing this is 100% QT. The reason that we're having waves down in the middle of this kind of slowdown, QT is going to slow down the rally because it's quantitative tightening. The Fed is no longer printing money and buying shit. They're letting things roll off. The Fed is getting out of the market. Imagine this: the Fed's selling their position. Pretend the Fed's long and they're letting their longs expire and they're not getting back in. So that kind of like propping of the market is over, and we're still feeling the full effects of QT, like starting to roll in now. Like this is what we're really starting to feel like those effects are fuller on the market in general. Now, the announcement of rate hikes turns Wall Street bearish as well. And so what this was a game the Fed played. We knew that we had inflation, and inflation was called cost push inflation. And the reason that you have cost push inflation, not the same kind of inflation as like a simulated economy looks great, like a bubble or whatever. Like in the housing market inflated because like everybody wanted a house and it was so easy to get a loan, and it was like stimulation pushed it up. But this was high wages, right? And shortages after COVID. Shortages made things cost more. It's a different kind of inflation. It's the mechanics different. Lay people off, then you have 5 jobs and lay off 5 people, and one person goes back to work with 5 jobs. The other 4 are like, I don't want to get COVID, and the one person's like, fuck it. Yo, bro, I'm in. Let's go. I'm gonna give him a hat. I'm in. I need some workers in each one of these jobs. Like, I want you. No, I want you. I want you. He's like, well, yeah, fuck all you guys. Who's paying me the most? And this one's like, all right, fine, I'll give you double your salary. And he's like, cha-ching. This is the best kind of economics, right? We're gonna learn with cartoons. He's like, I'll take it. So this guy's got double his raise, right? Double his salary because he's the only person in the job. And then each person sees that and they start trickling back to work and they want the same deal. Companies are desperate to get the ball rolling again. They're just paying double. And inflation built on high wages and shortages of raw materials. That's the front end production chain, which built its way into the consumer side, and prices. Consumer prices go up. The Fed controlling interest rates doesn't change this. It doesn't change this. That was a farce given to you, by the way. Fed raising and lowering interest rates will not change the mechanic of inflation. It's something that any economist or any street economist from the hood like myself can tell you, and everyone understands that. What the Fed actually did was they got behind their little secret meeting in the room and said, you know what? We need to bring wages down. We need to control labor market. How do you know that? Because JP said labor market literally every other fucking sentence every time he opened his mouth. That's what they're watching. Shortages came back once the logistical chain debottlenecked, once enough truck drivers and boat drivers and whatever go back to work. The shipping mechanism starts to speed up, and then, by the way, everybody gets their stuff back after just time heals that. Shortage effect went away, right? You had this effect where, like, you had a truck that needed to ship something, and you ordered furniture. You're like, this guy's scratching his head. He's like, he's dreaming of his like really awesome restoration hardware couch. And he's like, where's my couch, man? And his little dream bubbles. He's like, I've been waiting for 3 weeks, and there's a truck driver that's like, yeah, I know, I'm waiting to get it, but like, I can't get it because it hasn't been shipped to the factory. I'm waiting for another truck and show some wheels, and that truck is like, yeah, well, I can't ship it to the factory because we can't get truck fuel in the region. Like, we're out of diesel. And why? Well, because that truck hasn't been able to make it because the boat hasn't been able to make it. Well, why isn't the boat driven that there? Well, the boat can't make it because the boat needs repair parts. And they need to be driven to there by another truck, and that guy doesn't want to go back to work. It's COVID. That truck can't. No one else can go in there and hire. And then, so like, you're waiting on like all these different kinks in the chain, and everybody's waiting on someone else, right? I ordered a bedroom set, and it took me a year to get it almost, right, during COVID. We all remember that. But time heals that as finally people go back to work, and then the circulation speeds up and we're good. But wages is a whole different story. How and behind the Fed's secret room, you know, in their little meetings, this is what they said. They go, you know, we need to get the labor market down. Inflation is only going down one way. We need to force companies to lower their wages. Well, how do you do that? If somebody lowers the wage, this person can quit their job and go somewhere else at a better wage. Well, we must lower wages for all. Well, how do you do that? Well, let's scare the stock market. Jay Powell, very great. They don't tell you this in public. It sounds very doomy and gloomy. You people would fucking picket outside the Fed offices. They would say, you know, drag him out in the street and be like, we need some answers. My job. But it for the greater good. You remember from, what was that? From Hot Fuzz? For the greater good, right? It's this. Let's start raising rates, not because it's going to curb the actual mechanism of inflation, but because it's going to scare Wall Street. COVID happened, and then we're way up here. We need to just kind of slap Wall Street in the face for a little bit. Why? Well, because traders, we're going to announce QT right here. And there's a massive short squeeze following the announcement of QT. We're going to announce rate hikes here as well. And the market, let's say this, we're at this point in time. We're going to announce QT and rate hikes, and then at some point, the market's going to come down because, well, we haven't had both of those together in a long time. And traders are going to respond bearishness. Well, how's that going to change wages? Well, companies' values can start going down. We're in a very weird era of stupidity right now where people are getting double their salary to do half of their labor, right? None of you think that you're outside of this loop. This is all you motherfuckers. Listen, you got double your salary to sit in your fucking underwear and go to a Zoom call. You're all guilty of the inflationary mechanism. Everybody remember Zoom stock went like that. That's the era of stupidity we were in. And Jay Powell says, we gotta slap this stupidity in the face. This person getting double their salary to work one day a week in a Zoom call and to quiet quit or work at home or Netflix from home. Okay, we gotta do this. Stock prices start coming down. Shareholders will pressure the board and CEOs and everything, you know, to start firing people. And it's exactly what happened. You raise rates just enough and scare Wall Street that you're going to induce layoffs. And this was the Fed's goal, to induce layoffs. I mean, it sounds doomy and gloomy, but they did. And you can see that in the exact date. The data will show you that the moment in time, layoffs went up. That's exactly how I would have controlled inflation. I would have fired 10% of all of you. No offense. I love you all. But not as much as I love the greater good or love not living in a recession. I love the idea of everyone, some people taking a hit so that everyone doesn't die. And the hit wasn't that bad because y'all got your job back within a year. Okay. It's one of those hard decisions you got to make. But the real, in the street economics sense of the word, this is how things go. And you can easily see that. Y'all are going to love this. Let's just kind of pull those up. Initial jobless claim. Okay. And this is pretty much it. You can see like right about when the market, and I love teaching this stuff. You guys want to learn something today, make sure you follow the stream, by the way. Follow us. We drop these knowledge bombs every day. And you can kind of see that, like, you know, right around the turn of the year, just December, January, when the market started pulling back, we started inducing waves of layoffs. Like Wall Street just responded very nastily by selling off the stock and then firing people and bringing in, when the labor pool got saturated with more folks, it was much easier to have them be competitive on wages instead of you competing with your other fellow employers to get people to work for you. So now, since, you know, this is January of 2023, this is January of 2022. So right here, they just started inducing layoffs, and then people just sat there unemployed for the longest period of time. How cool was that? They scare Wall Street, and Wall Street starts selling their stock. Perfect. That's it. And inflation started coming down. Like you can just literally look at CPI, which we have tomorrow, by the way. And the moment layoffs happen, you started seeing CPI come down. Like the layoffs started, the minute continued jobless claims started going up, inflation started coming down. It's a really brilliant move, and we actually predicted it before it happened.
We go, Fed's raising rates. Oh, that's cute. They're gonna try to trigger and trigger layoffs. Okay, that's good. And we saw that. And then inflation started coming down. That's great. So all the mechanisms are there in general. Wages are coming down, inflation's coming down. It's great. So that's been almost cured, right? But the thing is they have to use the rate hike as a narrative. It doesn't really mean much. It's not controlling inflation too much. As a mechanism, inflation, the first half of the game was wages. Right now, the inflation has a lot to do with overstimulated economy slightly. And there's other mechanisms of inflation. You have spot inflation, certain areas like energy, food, things like that. And so it's still a little messy now, and layoffs aren't going to cure that. Right now, the only thing that's going to cure that is commerce. And there's a whole other arguments there. But just talking like where we are now, Fed induced the layoffs, and now the economy's starting to heal itself slightly. Which is good. What is going on with Res? Are we not updating here? Ooh, I don't like that. I'm still going to hang on to it, but we are full zone. Okay. That's okay. Last tidbit on that. The Fed was hoping that during the time they're going to use the rate narrative to bring the stock market down a little bit, but you can't bring it down too far, because if you pull liquidity out, you vacuum out liquidity, and there's really not a lot of support to the market like there used to be. There used to be like this brick wall support, and now you're no longer there as the Fed. It's still there, but you need the market itself to hold itself up. So the screaming bull market has now kind of slowed down a little bit, and it wants to do that. You know, we're going to absorb the idea of QT, and are we going to be bullish or bearish based on the economy? So what's economic data looking like now? This is basically really what happens, right? The faith in Fed liquidity is gone. We have to be liquidity providers now. We have to provide liquidity to the market. So as more people are working and things like that, you have more money going in the stock market. It just, slowly starts to get better. And so the question is, we're going to induce some layoffs, but can the economy still have good data if we do that? And then once they start seeing the market start selling off so hard, they start tapering off their rate hikes to flat, and then they're announcing cuts. The narrative is to drive the market to where it doesn't fall too far and it doesn't rally too fast, so that the economic data can slowly grow and match the labor market, and then wages can slowly come down, the inflation can slowly come down, and the market can heal itself. That's called the soft landing. And it is the soft landing, because even though we're laying people off, and even though it's looking kind of bad, inflation's coming down though. GDP growth is still good, right? People are able to go back to work. Companies are hiring again. Jolts are coming down. We're in hiring spree. So the idea is that we can pull the stock market back just enough that we don't nuke the stock market and cause a crash, because if that happens, then everyone gets laid off again, and you start all the way back to square one. Stagflation. It's like COVID. Everyone got laid off, and now you have shortages and high inflation, all that shit again. They can't crash the market, or they start over. And when they start over, guess what? Government comes to them and says, we need you to bail us out with QE again. The Fed's like, oh, fuck, we just wanted QT. We can't do that. So if they crash the stock market, they're going to have to come back and undo their QT policy and go back into QE and save us, because that's the only thing that'll rescue you from stagflation, Great Depression. So it's like such a tight ship. Let's induce some layoffs just a little bit. Hold on one second. Resilience isn't changing on my screen. Is resilience at -9? Why is it not changing on my screen? What the hell? It's not updating. It says -3.9 on my screen. Okay, well that would have helped me make a decision here. Well, shit. You guys see that on my screen? Technical error. Like, I'm just sitting here watching it at 3.9. Okay, now you guys have the proof of that. Well, that's a technical error that fucked me up. If I refresh this, what the hell? Now it's up to date. That's really odd. My socket disconnected. Okay. Wah. Oh well. I'm still okay, I guess. I would have trimmed though. Well, that's a technical error. These things happen. Wah. Okay, anyways, we're good. We're still at bull zone. Like, my question is, I would hedge pressure would support me, but you gotta hate when that happens. Did y'all see mine? It said 3, like literally -3. It just literally pegged out while I was giving the whole speech. It's okay. We're good. Okay, back to what I was saying. Let's refresh. I have no idea why it just pegged out like that. So long story short, like, where are we at in the market, right? That's what everybody wants to know. So let me get this back. Okay, now resilience is working again. I think my connection just dropped or something. Who knows? Hold on a second.
I'll be right back, everybody. Give me like 5 minutes.
All right, sorry, I'm back, everybody. Had a very important phone call come in. All right, what's going on with the market here? Oh, boo! I don't like what I'm seeing. How are we doing here? Resilience is still positive though, so I like it. Like that. Sorry about that, you guys. All right, make sure everything looks good. Yeah, res just went positive, which I like. That's good. That's all I wanted to see, and that's really I wanted to be on my long side, anyways. What a interesting day. So hopefully so. This is what I wanted to see. The resilience play from here. That's all I want. Now, I don't like that it's not getting momentum to move from this. Now again, we're UVXY, we have to be very careful on hedge break as well. It's just unlucky trade today. If I'm wrong, that'll just close out. Yeah, still here. Well, I had it. This is the thing, like when I had res sitting there at 3.9 for like literally 30 minutes and it didn't, the drop, like none of that registered for whatever reason. My socket disconnected and it was, so once I reconnected it, I looked at it and I go, okay, we're gonna see where we are. Hopefully we stay right here above 0. That's what I want to see. Let's search distance to half cap. Technical error today. What are our big stocks here? Apple. Let's see. Let's keep an eye on Apple today. I'm looking at stocks at around half cap that are going to be moving. Stocks, tech here, Qs, also JP Morgan. I'm still I'm still okay with it.
Okay. What else we got here? A couple things. Oh, there's no momentum today. I don't like this. Trying to get that support right here is one of the things I'm looking for. Just not getting that. Getting the left here. The res is still positive, which is good with no irrational signals. I mean, I'm trusting what I see, but we'll have to see what happens. We want to see anything down here. That's the second trade I was talking about. I don't know. It's hard to say with NVIDIA. I mean, it's a strong company. You know, tech, AI boom is kind of just been what's driving the stock market. It seems to be a safe play for the future. And like clearly, like, you know, it's the tech AI, you know, momentum is like the internet of the 90s. It's the next big thing. So people don't want to miss out on it. NVIDIA, you know, as far as it being, you know, one of the safest place to go in, people understand that, you know, when the internet was first starting to become popular, and stock market and the tech companies are starting to get all the heat from, you know, investors, there wasn't a utility there to make it widespread and to be a big global thing. And it took a while for, you know, a decade plus for that to be like realized. Now with the AI stuff is already starting like to trickle in and be part of it. Every month it's like something new comes out. So I mean, utility is here and people just don't want to miss out on the next big thing. And that is the next big thing. I mean, it's the future of everything. It's the future of not only like novelty items and things, the future of like everyone's jobs. I mean, this is going to change the globe. You know, if AI starts to become a bigger, you know, force in our lives, it's something that, you know, a lot of these companies are just going to be the future. I mean, like, think about like companies are just going to be like run by robots at that point. You know, chips are going to be the biggest commodity in the world. Imagine like Star Wars, right? You own a droid and droid does work for you. It's like everyone's going to own robots and droids. Like that's like the chips are going to be commerce. I mean, in the world of robots. This fucking weird ass market today. I'm looking for this right now. That's what I call it. All right. What's current? What are you saying? Read all these. I had to catch one of your the text here. So when the liquidity map is showing you, Colin, you asked, right? So liquidity map is just showing you like a new area. Like when price is in the bull zone, there's pressures that push there. When price is in the middle, there's pressure to push here. So right now we're in this kind of middle reverting pressure, like from the middle. So we see right now that the market's going to fight towards the middle. We have a rule that the DD usually says middle tie break goes to bull zone. So it would be the rarest of the rare to see this go down today. From here, so you can see like that fighting in the middle just to kind of consolidate. That's what this liquidity map is telling you right now, to expect that. So when price is up here, you're gonna have, this was your bull long up, and then here. So you can think of it as like the liquidity map can keep going down. You have three different ones. You have the middle one, the bull one, and you'll have a bear one as well. Like whenever it falls down here, but instead of like drawing all three of them in one spot, because remember, when your price is up here, you're gonna have a certain liquidity map for bull. When it's in here, it's mean reversion. You have a bearish one there. So it just kind of shows you which one is kind of active at the moment, but they're all pressures. Like if you put them all together, bull long up looks like that. If you break here, it falls to the middle and it can like bounce like that. There's a pressure there. You have hedge pressure there, so anything down here is a bear short up, which would have resistance there to monthly hedge pressure. They're just showing you paths of how it moves, so you can pull out trade plans. That makes sense. So in general, the way that you look at this is that the opening liquidity map is the trade plan that I go for. Like when it falls down in here, it's just telling me what additional to expect. My setup is to long from here to DD. That's my trade. Okay. We've got DD support, check. Resilience support, check. So here's your resilience support. Here's your DD support. This wants to be here. That trade is still there. When it falls down inside of here, though, outside of the bull zone, one must say, like, what would I expect down in here? Like inside of here, what do I expect it to do? Like, what if we fall into here? What's the pressure balance at that point? And then you see that there's support from bull zone, resistance from bear zone, and it's gonna chop and consolidate towards the middle. And so as you fall into here, your brain doesn't say, oh shit. Like when I saw it fall into there, I don't go, oh my God, the market's gonna crash. Does this make sense, Colin? Let me make it bigger. Look at me, I trust the indicators. Look, the market's starting to move in my direction as I'm talking about it. Looking good. All right. Does this make sense? So imagine what happens if I have bull side support and it falls through here. My brain doesn't say, oh fuck, market's doom and gloom. I'm gonna jump in and short that or whatever. Do we all understand this, everybody? Because mean reversion, liquidity pocket balancing in the middle like this, tells me that the market is gonna chop inside of here, which it did. You see how safe I felt in that trade? Can you guys hear me? Colin? So it lets me know like how markets are moving inside of here. There's the open V right there to trade to DD. That's that. If we fall below here, there's like choppy consolidating pressure towards the middle. So this right here is a characteristic of that other map that popped up, MR. Isn't that cool, right? Okay, that makes sense? Okay,
So I committed to a long and then a possibly long from right there. That trade certainly is something I want to look at like that. And it's exactly what liquidity map is showing. And look, as I'm talking, look, I'm not even freaking out. Resilience rule worked. DD rule worked. Guys, you see this? I mean, you can't make this up. Rocket scooter for the win. Now, granted, I'm going to trim right when we close the gap. That's always customary. Trim a little bit. You know what? Come on, get up there. You see how that works? This is such an easy day. Again, how do you recommend navigate? You don't navigate those shifts. I recommend you watch the videos. You don't navigate those shifts. I've said 1,000 times, when you commit to a trade, you're committed to a trade. That's it. When you commit to a trade, you set your stop, you set your reward, and you commit. That's it. If the market falls into a new liquidity map, it's just to show you what to expect. You don't scare yourself out of the trade you committed to. You just commit to risk, commit to reward, and that's it, right? Set it and forget it. Every time. Once you commit to a trade, commit. Liquidity map changing will give you additional information. But that's it. Say like I longed here and market was falling. Well, I know that it's not going to do this. I know that it's more likely do this. So my brain goes, oh, you know, down in here, I probably got an hour or two of choppiness before it makes up its mind. Let me be patient. So I don't change my plan and say, crap, let me get out of the way. If I commit to a long there, my stop is set, whatever, based on the first trade I make. Does that make sense, Colin? So the opening liquidity map is the trade that's taken on my end every time. Markets can change direction and move to different places. How to know it's not going to fall? Yeah, but literally the thing I drew earlier this morning, right? You have resilience mode 2 has support there, and sometimes you lose support. Like it bounced and then we lost it. Okay, no good. All right. The other factor of resilience is that the bottom of the box fluxes to the top of the box, and we just saw that. Let me trim a little bit more. Okay, I'm going to take out half. You have support right here from DD. Res, DD, res. All these are pivots. You got pivot here, you have pivot through the box. That's it. 96.6% of the time, if you open in bull zone, you close in bull zone. The market does not want to leave this bull zone. Rational market, again, this is the SPY backtest. This is not made up numbers. 96.6% of the time, you will close in the same zone you open in. If the DD is matching, it ups those chances even more. So bullseye doesn't turn bearish at all. And also mean reversion, which is in between those zones, is always choppy and supportive and holds the middle. And there's a DD rule that says the middle fluxes to bull zone when DD is bullish as well. It's another cheat sheet on bullish. Like literally, if you study all the cheat sheets here, your DD ratio bullish, the middle pushes to bull zone and the middle pushes to bull zone. You see that? This right here literally is drawn. It's not that many rules. Each, like DD has 3 different modes, resilience has 3 different modes, and that's basically it. And liquidity map just draws the arrows. So you can really see that like the confidence is high, the market's not going to crash. When you lose a bull zone with positive DD, your brain just says from the middle wants to jump back in right here. That's why I was closing my position. So my trade is to there. Just lost money just a little bit. The bigger trade's going to make money if I win. My last small account challenge that I did on YouTube, I won a 75-day win streak. 75 days. Where I won 75 days and or didn't lose in 75 days of trading. 75 trading days, which is like 3.5 months. A lot of you were here for that. So I spent a lot of time being very meticulous about my trading. See, I lost, market fell, I didn't panic. We filled the gap. I took some profit, just a little bit. Not profit, took some smaller loss, sorry. So I longed like essentially right here, and then I closed out right there. So the trades I took out on was a small loss from here to here. You see how that works? Okay. So now I'm looking for resilience to maintain integrity. Right now, I'm looking for this to support again. I might scalp again and build a second position to push higher and jump back in on what I had. So each of these roles help give me clarity and guidance on these different things. These cheat sheets are available to all of you inside of our Discord. All you have to do is be part of the group. It's $19.99 for 1 month. Try for the first month, literally for the $200 package, for the full Pro Plus unlock, which is all the features of the platform. So when the liquidity map shifts, it doesn't change your commitment to your trade. It doesn't mean the liquidity map shifts. It's just showing you the other places. Like the liquidity map isn't changing. The price is changing into a new map. So if I commit to a trade and find pivots up here, if I chime into the market and it's up here and I commit to a trade up here, I'm just committed to the trade. I have risk, I have reward, and I'm done. If you see the market price move to another region or another area, then the liquidity map diagram will change to something different, which will show me what to expect on my loss side, like how it's going to navigate while I'm wrong, right? If I'm long one way and it goes another way, how it's going to navigate. And so I use that to like understand, okay, what am I in for now? We lost bull zone, but DD's positive. So what's the worst that can happen? We go down here and it bounces right back up. That's what I drew on the screen. And it's going to be choppy in the middle, like always. And DD rule is going to ultimately take over, hopefully, and win, right? And then that's how I treat it. I don't go in and say, fuck, okay, now I need to take the short. I've committed to a trade. I'm done. If I'm wrong, I'm wrong. And I get out, right? So now we're back to the original trade I was trying to do, which is looking pretty solid, right? We're going to trade right back up to test the highs in a second. Back to mode 1 resilience. Maybe I can put that 2 back on there. Original trade I wanted. Yeah. 19.99, you get like full access to the platform for just the first month to try it out. Can I look at oil? Yeah. Hold on really quick. I use Rocket Scooter to trade. For my futures, I trade through my own platform. Can you trade here as well? Yeah, you can. You have oil right here. Oil doesn't really have. Let me double check this really quick. Where's the? Oil. So oil started bull side, lost. So it's a different than the S&P because oil doesn't have like resilience. It doesn't have DD or anything. But oil basically has no actionable pivot. It's a bull long up, right? At the start of the day. There's nothing actionable about that right there. Bull zone could be support, but in bull long ups, the only support is hedge pressure or the open price. So let's talk about oil real quick. Let's put this over on the side here. Oil opens here, so the only support is the open price to next resistance. Clearly the market opened and it's losing the support already. I don't buy bull zone bottoms on bull long ups like that. I will in the index because I have DD to break a tie, but in oil you don't have that. It's not an index of something. So essentially oil, if it would have moved here, I would have longed to at least fill the gap and trade somewhere else. The idea that you open, you gap down, you start trading down, oil has no support. We don't use bull zone support like that. Anything other than stocks or index products, right? Because it has a different mechanism. Commodities are their own animal. So there is no bull zone support in this one, right? So I would have done nothing on oil. Let it fall. It's not bullish or bearish. I would have made a choice. Do I want to long right here? Mean reverting so that it pushes to the middle. If I were to commit to a trade, I'd commit to a trade from there, maybe to there, and bet that it ends up there with a stop. But honestly, today would just be something I wouldn't trade oil on. I don't usually like when you fall into here and then come down inside of here. The rarer cases go from bear side to bull side, and I particularly don't like trading this, even though it's not a terrible idea. If I were to commit to a trade, the risk and reward is there. I just don't like the probability of it, so I'd probably sit out. So essentially, if oil would have gone up and come down to here, I would have longed. Right there. Oil doing this and then coming down to here, I would have done nothing at all. I would have contemplated doing something there. You got it, Andres? Makes sense? Hopefully so. I follow this to a T. I never deviate from liquidity map. It's like always the same. All the information is here. So open, blue, open is typically a trade. So open, blue, open is typically a trade setup, like committing right here. But like I say, in this particular case, this stays inside the bull zone. In this case, we went all the way down to the bear zone. And while liquidity pockets do kind of push to the middle, there is no DD tie break. Like that rule is index only. It's an index thing. So the question is, I can commit from here to here, and I just don't like to normally do that. I mean, anything other than the index. Okay. Because with a single commodity, we have no tiebreaker. The index, I've got 96% of the market cap still supporting bull zone. Right? Okay, cool. All right. Everybody, well, I have a quickie. I got to bounce, but I'll see y'all later. We'll have a Zoom call like we did yesterday. We'll do the Zoom call earlier rather than later today. Make sure y'all come over here. If you have not checked out Rocket Scooter, I swear. Where's my music here? Oh, well, whatever. Oh, here it is. Spooktacular, $19.99 a month to check out full Rocket Scooter. Literally full Rocket Scooter, $19.99 a month. It's $200 package. Full price is that. For 1 month, just for Halloween, use this code. It only applies if you haven't been a member before. You can check out everything. You can learn all these rules, play with all these tools, jump into our platform. We're about to open our huge marketplace. It's such a big deal. We're going to be more tools for you to buy, more things for you to play with. It's insane how quick we're growing and how much cool stuff we have for you. Please come check us out. We love to have it. And jump in that Zoom call today. We can have that and teach you some of these tricks. So we love you guys. Thanks for tuning in. Like I said, today was a great exercise in patience, a great exercise in what happens if you have a technical error and then you go, oops, so what do I do? And then I kept my cool, still in the trade, not really losing much, hanging in there. So hopefully it turns into a win. We love you. Go down, like the stream on the way out, and make sure you go to our Discord, send me a message. I'll give you some directions.